Hey, chiropractors, welcome to Modern Chiropractic Mastery with your host, Dr. Kevin Christie, where we discuss the latest in marketing, business, and professional growth with some of the leading experts in the industry. Welcome to another episode of Modern Chiropractic Mastery. This is your host, Dr. Kevin Christie, and today I'm excited to bring on a tax strategist, and that is Barbara Schreihans. And the tax strategist is different than your accountant, but a tax strategist like Barbara could do your taxes as well. I've mentioned it before, but there's accounting that's kind of post mortem. They just do your taxes, look at what your QuickBooks says, and they do your returns for you. But then there's also people that are more into the tax strategy, and they develop a plan for you ahead of time to get ahead of it. And one of the benefits of being a small business owner is the fact that there are tax advantages to it. You definitely get taxed more than you probably should, and things like employer taxes frustrate the heck out of me. The fact that I'm providing a job, and for every say $1,000 you write a payroll check, you get taxed 10%, give or take, depending on what state you're in, or you're getting taxed for providing jobs. So you're paying your quote unquote fair share. But there are ways as a small business owner you can try to legally and ethically optimize your tax strategy. And that's what we're going to talk about today. We're excited to have Barbara on our Zoom training for our mastermind group. For both of our groups, we always supplement the in person with three Zoom trainings throughout the year. This year in 2024 was all about the financials of things. And then in 2025, we're going to have a different theme and topic around our Zoom trainings. But Barbara was kind enough to present an eye opening presentation to us. And she brings great information to this episode as well. Speaking of, trying to optimize things, you should at least consider coaching. And one of the things I'll say about our program at Modern Chiropractic Marketing, you can go to modernchiropracticmarketing.com, is that we have a framework, right? We don't have a cookie cutter approach, but we're going to try to make you very, very effective as a business owner and help you grow and develop business and marketing and communications and financial strategies. That's a framework, not pigeonhole you into something that you don't want to be. And one of the things I'm proud about with the members we have, and we do have quite a few now. We have ART instructors, we have diplomates, we have chiropractors that are team physicians for different professional team sports. We have industry transformers. We have people that teach other chiropractors things. Right? We have a very clinically skilled coaching membership, and I can't say that about all coaching memberships. We're very very skilled clinically as far as our membership, but then they want to take that next step from a business perspective. So if that's you, check us out at modernchiropracticmarketing.com. There's a coaching tab. We've kind of freshened that up, and a lot of the information is right there. And then you can submit a form and reach out to me directly, and I'll reach back out to you directly, and we can set up a consultation call to discuss what that looks like for your practice. All right, without further ado, here is my interview with Barbara Schreihans, and we are going to dive into tax strategy. All right, welcome to the show, Barbara. I really appreciate your time today. It was exciting to meet you on our Zoom call we did for our mastermind members. You brought a ton of valuable information. I'm excited to share that with our chiropractic industry here. But before we do, tell us a little bit about yourself, personally and professionally, and then we'll dive into it.
Yeah, I'm Barbara, founder of Your Tax Coach, and we help business owners save money in taxes. In my previous life, I was in big public accounting, and I just hated that we weren't actually helping our business owner clients save money in taxes. So I kind of created my own company. I'm married, love to travel. We're always like nomadic, so we're always in a different place, and love coffee and Pilates, and that's a little bit about me.
Love it. Yeah, I was trying to figure out the time zone because I think the last time we spoke, it was a different time zone you were in, and now it's a maybe Pacific time zone. That's a pretty cool ability to travel around. And one of the things I wanted to dive in right out of the gates, and you kind of touched on it, is that obviously there's traditional accounting, and a lot of times I've phrased it as kind of post-mortem accounting, right? So you got your accounting done, you did all your stuff, and accountant's going to do your taxes for you. You have to and file all of that. And then there's tax strategist. That's going
Mhm.
to help you develop a strategy. Also, can do the traditional accounting at the end of it. But could you give us a little bit of a differentiation there between what you do and then say that post mortem accounting?
Yeah, so your typical accountants are just going to put the numbers you give them on a form, right? Your tax return that's due by April 15th or October 15th if you extend. They're not really looking to change any of the numbers. Whereas we are looking at your numbers ahead of time and saying, what can we change? What strategies can we implement to either lower your profit, increase your tax credits so that you're taxed less and have more money in your pocket? So for us, we're very proactive, right? We have to meet with you throughout the year. We want everything done prior to 12/31. Whereas traditional accounting, they're very reactive. They're just after, the new year, they're filing your taxes. There's not a whole lot they can do.
Yeah, exactly. And I think that's the key, especially as a small business owner. There's a lot of variables, and I know it's hard. I'm a small business owner. We've got two businesses. We know it's a struggle. We know cost of running a business is going up, and cost of employees is going up. Taxes aren't fun. I always like one of the taxes that bothers me the most, and I pay a lot of different taxes, but the one that bothers me the most is the employer's tax, right? Like, and I know obviously you know this, but for our audience, and we have some chiropractors that aren't business owners yet, but someday will be, is like, writing that, say, $1,000 payroll check to someone, and then the government actually taxes me on that for Social Security and
Yeah.
Medicare matching. And like, I'm like, you're taxing me for providing a job and paying someone. That one really just gets me. But we're getting attacked from all angles as a small business owner, and
Yeah.
and taxes are definitely one of that. But what's really cool about being a small business owner, and some of the things that you help out with, is realizing there's actually a lot of benefits that, if done right, can even outweigh the negatives of the taxation and costs of running a business.
Yeah, totally. I mean, I think it's easy to put taxes down and say, we paid too much in taxes and all of that. But the reality of being a business owner is that's when it becomes kind of fun and it can be more like gamified of, okay, how little can I pay in taxes? Whereas
Mhm.
when you're W-2, the taxes are just taken from you in the beginning, like before you even get your check directly deposited into your account, the taxes are taken. Whereas when you're a business owner, you get all the money into your account. You don't have to pay the taxes yet. You can spend your money on expenses. You can
Mhm.
implement, things that benefit yourself, like a retirement plan or benefits and things like that to lower your profit. And then you're not taxed until later on and you're only taxed on the profit. So there are like huge, huge benefits of being a business owner rather than just a W-2 employee.
Yeah, and I want to touch on the one thing, and we don't dive too much into it, but it was eye opening for me. Was a handful of years ago, 4 or 5 years ago, when I started a 401k in the business. And yeah, if you're going to do that, there's probable, you got to get offered to your employees at some point in a match. But I maxed mine out, and it was like I used to, pay myself, and then it was after tax, and then I would save that money and maybe put it into a stock market or something. But when I did the
Mhm.
pre-tax, the 401k, one of that cool benefits of it was obviously lowering my taxable income, which has been a nice benefit to us. What are some of your thoughts on that?
Yeah, we love implementing retirement accounts in with your business. A lot of
Mm.
business owners don't think that you can implement a retirement account in the business, whereas like it's a business deduction. A lot
Mhm.
of people think you just have to do it, later on through your personal account. And there's so many great, great ones out there for people that don't have other employees besides
Mhm.
their kids and spouses or full-time employees. A solo 401k is amazing. You can put up to $69,000 every year away. Double that if you and your spouse are in business together. So that's like $140,000. That is a business deduction for you. And you're just putting your money into a retirement account that's yours. So essentially, you're like paying yourself and getting a business deduction. And when you do start retirement accounts in your business, you can get a retirement plan tax credit. So you actually get a tax credit for the cost of implementing the plan. And if you have employees, you get an even bigger credit as well.
Yeah, I love that. And one of the things that I've come to realize is that as a small business owner, you're playing a different game. Than say your friends that are W-2 for a corporation and they, they let's just
Mhm.
they make a salary, they get their tax and they do all that. But they can easily on a tax return say, I make $125,000 a year. As a small business owner, it can look a little funky, right? Like you may not look like you make, let's just say $125,000 a year on your tax return, but as a owner,
Mhm.
it's almost like you got to like add all of it up, like your kind of owner benefits slash compensation, right? And maybe you're taking home a certain amount, but yeah, you put in $40,000 into an IRA, right? That's in
Yeah.
that you should count that in your mind as like, yeah, I made that as income. It's just being saved and it doesn't show up on my tax return, which is good news. Or
Yeah.
you mentioned something I would love for you to touch base on a bit, and you dove into this more into our Zoom call, but was like kids and spouses, right? Like, talk to us a little bit about that.
Yeah, I love involving your family into the business, not just for tax reasons, but more
Mhm,
of just like generational wealth, teaching your kids more about business and money
mhm,
and how, you can generate profit and sales and marketing, so many like valuable things that our kids need to learn that they don't learn in school.
mhm,
But there's also a tax benefit for it too. The IRS wants you to involve your spouse and your kids in your business. Like that's really how small businesses started back, hundreds of years ago. And so they incentivize you for that by allowing you can either hire your spouse, you can add them on as a part owner, you can
mhm,
add them onto your board of advisors or board of directors. And same with your children. And there's huge tax benefits to that. I mean, the whatever you're paying them is a deduction in your business. You can add them
mhm,
onto your retirement plans. Maybe they all need cars for the business. You can add them into your business travel expenses. So now,
mhm,
whenever you travel together and you have a business reason or purpose for that, or you want to have a board meeting in the Bahamas, like that can all be a business expense. So you don't have to be like so rigid in the expenses that you're taking. You just have to tie it somehow to your business and that it can in some way, shape, or form generate revenue for you. And then yeah, just like make
mhm.
it fun.
Yeah, no, definitely, and obviously, it's got nice tax implications there too. Now, what are a couple things? Because I think a lot of people can connect the dots on, employing their spouse in the practice of some nature. But what are a few things that you could technically hire your kids for, as far as say a chiropractic practice?
Yeah. I mean, kids, I mean, depending on their ages, right? But we
Yeah.
have like people that employ their 10-year-olds for social media management. Like
Hmm.
10, 12-year-olds know social media so much more than we do, especially
Hmm.
like TikTok. And there is a huge, I think, gap to fill with TikTok. Like you can make a lot of money on there, especially in the professional services, because so many people are on there like doing dumb stuff that
Hmm.
when you actually put like value out there, people are going to watch and listen. But yeah, social media management, they can take your photos, take your videos. Like my 6-year-old is the best photographer. Like my
Hmm.
husband sucks at taking photos. Like he's the worst. I do not ask him to take photos anymore, but my 6-year-old loves to do it. And he'll take like 100 photos for me. And, one of those 100 will be great. So they can take your photos. You can use them as models in your own business. So we have a lot of chiropractor clients that focus on like mommy's health and pregnant
Yep.
ladies or babies. And so, like, use your kids as models in those videos when you're adjusting them. they can be doing admin work. So can they reply to emails? Can they schedule calls? We have clients that will send videos of their kids being like, "Hey, how was your appointment? We love your
Mhm.
feedback." And like who wouldn't want to respond to a cute 8-year-old asking you, how your appointment went. So there's so many different ways. We have a list of over 100 different things your kids can do in your business.
That's great. Yeah, and obviously, if you're talking about 15-year-olds, 16-year-olds, 17-year-olds, they can obviously have a high capacity to do things, and it could even be things like
Hmm.
filing, and you could probably have cleaning. And I'm going to start bringing my
Yeah.
kids in at some point, start cleaning the chiropractic tables, and so I'm
Yeah,
sure there's
exactly.
a lot of things they can do to do that. So there's a lot of benefits in that. Obviously, you want to do it the right way, and that's the type of stuff that you help them with documenting and tracking and all that. So that's really cool. Let's take a break from today's episode and announce our first sponsor. This is going to be Propel Marketing and Design. I've known Darcy Sullivan for years. We've worked hand in hand on my websites. I don't trust anybody else to do this search engine optimization. She does a great job. There's so much to it. A lot of the lingo and the words are beyond my comprehension, but it's just amazing work that she does. And if you're really going to get results with Google, you have to make sure your website is SEO optimized. And I really don't want you doing it yourself as a chiropractor. So you just have to have this type of stuff done. And if you're looking to get more organic online traffic that pulls in new patients, Propel Marketing and Design is currently offering chiropractors who listen to this podcast a free SEO website review. The free review will help you uncover methods that will improve your website and boost your search engine visibility. Head over to propelyourcompany.com/chiropractor and schedule your free SEO website review. You won't regret it. She gets great results. Your website needs this. Your search results need this. Head on over there to propelyourcompany.com/chiropractor to get your free SEO website review. Let's take a short break for one of our great sponsors, TrackStat. It is a new type of software plugin for your EHR that combines patient communication, marketing, automation, and statistics with patient and employee tracking. Built by chiropractors for chiropractors, it shows your team what to focus on each day. See patient visit habits, missing information, unpaid bills, insurance collection visit average, and more. Great visibility of data so you can focus on filling your office with your best patients. When you can see what your staff and patients are doing or not doing and take action accordingly, your profits naturally grow. Take TrackStat for a test drive in your office with our free trial. Not a techie, no problem, we can help. To get started on your free trial, visit trackstat.org and watch the demo. That is trackstat.org. You do work with a lot of chiropractors, and that's how we met you, is through one of our mastermind members, which was great. And um, from a chiropractic practice standpoint, what are a couple other kind of low hanging fruit things that the doctor could the practice owner could save on some taxes and strategically improve their situation there?
I think the biggest thing and the first thing people should look at is how they're structured. So, what
Mhm.
entity type they are. Because if you're running a practice where you're making over $40,000 a year, you should probably look into being an S corporation. And people just like miss the boat on that. They get their LLC for liability protection, but then they kind of just like set it and forget it. But you should always be looking at your revenue, your profit, and see, is there another entity structure that can help me save? So, for example, if you're making $100,000 in your practice and you're just an LLC, you're going to be paying $15,300 more than the chiropractor that's an S corporation. So, and that number goes up even
Mhm.
more if you're making more, obviously, than 100K. So looking at how you're structured is huge. And unfortunately, like a lot of accountants don't know how S corporations work, so they don't suggest it to people soon enough. Or I just like to say like they're lazy too, because there's a lot of work on our end that we have to do to set you up as an S corp, make sure you're on payroll, that you're taking the right amount of payroll, that you're having a board meeting every year. So there's a lot of unfortunately lazy accountants out there too that just tell people, "Oh, you're not ready to be an S corp." And people just believe them, but it's like keep asking questions.
No, it makes a lot of sense for sure. And I think I was probably a year in my account. This, but I owe my price 2010. I think it was 2011 because I was in LLC traditional, and then we did the subchapter S or S corp from that. And I was like, wow, I didn't know that. That's pretty fascinating that that makes that big of a difference, you know?
Yeah, well, it's good you did it just a year in. We'll see clients like they're 15 years old and the business is 15
Yeah.
years old and like they've never been an S corp. I'm like, oh my gosh, you could have saved like 20 grand a year every year for 15 years.
Yeah, you know, I didn't do everything right out of the gates. It's been a slow bake with good. Part of what's great about this podcast is I've had it for 7 years and I learned a lot of different things from our guests, like yourself, and a couple of things that I have learned over the years, and I want you to speak on one of them. But just for our chiropractors out there, is some of your elevation chiropractic tables. So some of the chiropractic tables out there qualify for an ADA credit, tax credit. And so I have
Mhm.
a few of those. So I've taken those when that was done. So if you haven't done that, look into that. The other thing is obviously depreciation of equipment in real
Mhm.
estate. So like I own my office real estate, and I know some other chiropractors do. Can you speak to the depreciation aspect a little bit? I know it can get in the weeds quite a bit, but that is something I'm assuming some accountants probably get lazy on as well.
Yeah, so speaking on building ownership. So let's say you're a chiropractor, you have a chiropractic business, that's one entity. You want to make sure your real estate is in a separate entity because your business is active in the eyes of the IRS and your real estate is passive in the eyes of the IRS. So you don't want to mix your active and passive income. So
Mhm.
let's say that that is done correctly. Your building that you purchased, there's kind of two ways to depreciate it. And the normal way, like most accountants are going to take the building, they're going to divide it by 39 years. Most
Mhm.
commercial buildings you depreciate over 39 years. And so that means, let's say you had a purchase price of 390K, you divide it by 39. So you get $10,000 a year in depreciation expense, meaning you get to take 10K of expenses. And then to take it even further, you want to make sure if you own a building that you take advantage of cost segregation studies. So
Mhm.
a cost segregation study will accelerate that 39 years. So we're going to say now, because it has to be signed off by a CPA firm or an engineering firm, but hey, that whole building is not 39-year property. You know, the flooring is 5 years, the paint is 5 years, there's appliances that are 7 years. You know, we break everything out in the building so that it's faster than 39, which means you get more deduction. So, one, make sure you're getting a cost seg on your property.
Mhm.
The other huge one that is really, really missed by most accountants, it's called the self rental election. Now, this can only be made if you own your practice the same percentage that you own your building. So let's say you, Kevin, own your chiropractic business 100%. But when you bought your building, you happen to buy it 50-50 with a spouse because most real estate in most states, you have to buy it 50-50 unless you sign a form that gives it up. Um, you can't make that election now because you own it in different percentages. But let's say you also own the building 100%. Now you can make the self rental election, which makes it so that this passive activity is now active and the losses from your real estate can offset your business income. And this is huge because if we do a cost tag on your property and we can make you at $100,000 loss on the
Mhm.
rental, you now get to basically take $100,000 deduction on your business. So you're only taxed at whatever 100K less than your profit is, which is like such a cool thing. And most accountants don't know how to
Yeah.
make that election or that it's even out there.
That's a good one. That's a really good one. And you know, I think that's something I talked to a lot of chiropractors about buying their real estate. And you never want to buy the real estate if it's going to like kill your practice, right? Like you buy too much, it's you can't afford it. Your practice is draining money for that. You know, there's negatives to buying real estate. There's obviously a lot of positives.
Yeah.
I think most people look at the positive as the fact that A, they're gonna not their rent's not going to increase every 5 years with a new lease. You know,
Yeah.
obviously it's going to be an appreciation, but I think the thing they don't realize is the actual tax benefit of owning the real estate. And so that's something to consider
Mhm.
when you're when you're doing all the math if you're looking at buying a space. So I'm glad you touched on some key aspects to that.
Yeah, I
Um,
think a really good way to look at if they are looking at buying real estate, and we go over this in our Write Off Your Real Estate course, but I tell people to calculate it 4 ways. One is what tax benefits you're getting, like depreciation. Two, what the mortgage payoff is. So you're actually decreasing the amount you owe. Three, how much equity you're gaining. So every year, if you're in a market that increases 3% every year, 5%, 10%, whatever it might be, but you're actually, increasing your net worth.
mhm.
And then the actual cash flow calculation. How much are you getting in excess of your mortgage that you're paying? So always calculate those 4 ways, add the percentages together, and that's actually your benefit of owning that
Wow,
property.
that's good. I'm gonna make sure I write that out in our show notes. That was a good little bullet point there, because there's a lot of moving parts for chiropractors trying to figure out that real estate, and that really helps with that. So thank you for that. Um, one kind of big topic here, and it's something I think comes up with a lot of chiropractors is at the end of the year, their profit and loss statement says they made, let's just say, $50,000 in profit. And they're like, where the
Mhm.
hell did that $50,000? It's not in my account, right? And so they're confused on that. Like, I don't have the $50,000. And then they get hit
Mhm.
with a tax kind of bomb of like, account comes back. It's like, oh, you owe $20,000 in taxes. And they're like, well, shit, I don't have any of that money, and it
Yeah.
becomes a big burden. And I've run into that quite a few times talking to chiropractors that I coach, from just a business and marketing standpoint, is like, oh, things would be okay, but I just got my tax bill. What are some strategies for that chiropractor to prepare better for what may be coming? Because obviously we want to be profitable. There's good things in
Yeah.
profit and you reinvesting it and things of that nature. What would you
Mhm.
recommend they do to try to offset that situation I explained?
Yeah, make sure that you have a really, really good bookkeeper, and that
Mhm,
bookkeeper will keep you on track monthly of, okay, here was your profit. This is how much cash you actually have in your bank accounts.
mhm,
And they should give you another report called your cash flow statement. And your
mhm,
cash flow statement actually explains how much runway you have with your cash flow. So, what are your expenses monthly? How much cash do you have in the account? So that you can better plan. So first, make sure you have a really good bookkeeper and that they're keeping up with it monthly. Then make sure you have a really, really good tax strategist because they'll be giving you quarterly estimated taxes. Like you should not get to the end of the year and have a $20,000 tax bill that you were not expecting. That means your accountant was not planning correctly and or you didn't give them the information either correctly, accurately, on time, whatever it might be. So you have to plan and pay your estimates every quarter so that you're not surprised later because it's a lot easier to pay a $5,000 bill every quarter than a year later and you're like, "Oh my gosh, I have to pay 20K, but I spent it on that family vacation at Christmas time," right? So again, make sure you're meeting with your accountant every quarter and have some sort of savings account where you're putting a little bit of money away every month for taxes because taxes, we see it all the time, like puts people out of business. They get that mindset of like, oh my gosh, why am I working this hard in my business and I have to pay all this money to taxes? But in reality, it's just poor planning because if you looked at your effective tax rate as a business owner, it's so much lower than W-2 earners. You just have to be a little bit stricter with yourself.
mhm. No, it makes sense. And I just want to wrap up a little bit here on kind of going back to what we started in the beginning was defining a little bit more of tax strategist versus bookkeeper versus accountant. Because we get a lot of these people in chiropractors in the Facebook groups, and they'll start bringing up the question is like, oh, how much should I pay for accounting? And then people throw out these numbers, and it's like, well, when you actually look, it's like, well, that's actually just tax preparation. That's a one fee tax
Mhm.
preparation accountant. You're not really working with them throughout the calendar year. Or you'll see somewhere it's a monthly thing, but it's really actually they're talking about their bookkeeping, not their accounting. You'll be surprised. There's a
Yeah.
lot of confusion amongst chiropractors on what that is. And then with it. in my opinion, like with a tax strategist, you're bringing on someone that you're actually looking for a return on the investment you're making in that tax strategist. Whereas obviously like an accountant, it's just like you just have to pay the bill to get your taxes done. Like it's just it's not
Yeah,
necessarily there's not going to be a return on that investment other than the fact that you're not going to go to jail, right? So
exactly.
with a tax strategist, like you're actually investing dollars into a person or a group that should have a return on investment. And so you got to
Mhm.
look at it a little bit differently than again just your tax preparation, filing, that type of stuff. And so I just um, did I get that accurate? Is there anything you need to kind of shine on that there that I spit out?
Yeah, no, I think you hit it perfectly. I always tell people, well, when they're like, "Oh, I just pay my tax person $1,000 to prepare my return." And it's like, "But what is that person costing you?" So
Mhm,
that same scenario of, "Oh, I surprisingly owed 20,000." Well, if I could have saved you 20,000,
mhm,
that accountant that you only paid $1,000 to really cost you $21,000 because you overpaid by 20,000 and they charged you 1,000. So really their cost was 21,000,
mhm,
right? If I charged you 10,000 and saved you 20,
mhm,
then you just made $10,000. I didn't cost you anything.
mhm.
And that's our goal with every single one of our clients is to save you way more than what our fees are. And we check that ahead of time. We're looking at
Mhm.
your numbers, we're looking at past tax returns, and we can give you an estimated number of what we know we can save you. And then year over year, you're actually going to be saving more money because the more we know about you, the more we can dig into your numbers, the more we know your goals, you're just inevitably going to save more money in taxes.
Yeah, and that's one of our goals here at MCM is getting chiropractors to kind of rewire the mindset a little bit of, um, that return on investment. Like sometimes you got to spend money to actually make money, or spend money to save a lot of money. And that could be in
Mm-hmm.
things like this. It can be in hiring certain people. It can be in coaching. Like there's a lot of different ways where chiropractors need to be able to maybe outlay some money to make money, or obviously save a lot of money and run a much more efficient business. And it's just exponential when you start adding over the years of like if you learn all this stuff now and you apply for the next 20 years of your career, how much money that is
Right.
versus if you just keep on dragging your feet and then you regret it down the road when you figured it out when you were 55 years old. Right. So
Yeah.
I'm glad you gave us that breakdown. I know we're running up against the clock here. How can our audience find out more about what you have to offer?
Yeah, go to yourtaxcoach.com and follow us on Instagram at yourtaxcoach. We like to drop like daily tax tips and tricks. So even if you just follow along to learn more things, education is power. So thanks for having me.
Awesome. This was phenomenal. A lot of great information. And I want to thank you again for doing that Zoom training for our mastermind. We were able to really go in depth with some things, and we got a ton of great feedback on that. And because one of our goals this year for the mastermind was to make our members completely financially literate and feel like they're really
I
starting
love
to
that.
own the finances of practice.
Amazing. Thank you.
I hope you enjoyed this week's episode. And if you want to make the shift from busy, broke, and broken to time free and cash confident, or you just want to continue with the exponential growth, check us out at modernchiropracticmarketing.com. Look at the MCM Mastery tab, watch the short video on there, and check out what we are doing now for evidence informed chiropractors. We are equal parts coaching and marketing done for you. Yes, you shoot some videos, we help you with campaign strategies and ideas and really become a thought leader in your community. You shoot those videos, you send them to us, we produce, edit, and brand them to you. Then we distribute them through all of your channels. We also take them and we turn it into one good blog per month. And every other month, we have Darcy Sullivan producing a robust blog with a topic that you pick from her database to help with your SEO. So we essentially become your content marketing agency to make sure your practice is always having ethical, elegant content marketing to help grow your practice. On the coaching side, we also help you with everything from marketing ideas to business, communications, finances, anything practice growth. and really try to help prevent you from being stuck on that island. And we hold you accountable. We have a great group of doctors that are just doing amazing things, and we look forward to help you out to take that next step in your practice. So again, check us out at modernchiropracticmarketing.com and learn more.